Mr. Greeley will speak, and we'll bring that to you worldwide as well, a single best chart.
I'm speaking live, Tom. We should put a little bug in the screen. Live. We can all be replaced by robots. A robo-advisor is a software system that automatically invests and rebalances portfolios. It is also the subject of today's single best chart. This is according to consulting firm A.T. Kearney. We are looking at a very obvious growth pattern. Tom, what's going on here? If Vanguard came for Fidelity, are robo-advisors coming for Vanguard? What's going on?
It's been around for ages. Do you have an algorithm that will outsmart an index? John Bogle figured out that you don't need an algorithm. You just buy the damn index for lower fees. And the real question here is, do algorithms work? And it's funny how they don't.
Right, but don't you have to rebalance among indexes? We can all say markets are efficient, you can't beat the market, Gene Fama was right, but don't you have to pick which markets you're in?
You have to pick which ones you're in, and the rebalance debate is one of the most interesting intellectual debates. Sri-Kumar's over here, and this goes back to your work with Trust Company the West. You think of a big institution like TCW, they have to rebalance, and yet, as you and I know, it's a raging debate.
Yeah, it is a raging debate. The debate is not only between active management and passive management, but going to what Brendan said, when you rebalance it on a periodic basis, what is the basis on which you're going to do the rebalancing? And if you have set rules ahead of time and the rules look respectable, then you continue with it, and I think that process can work.
And this can be dogs of the Dow, is something as simplistic as, you know, don't buy the worst, buy the second worst dog of the Dow.
But here's what I wonder about. I don't want to get into epistemology, but isn't an algorithm like a model in the sense that it carries certain assumptions, and those assumptions can be right until you get way out into the tail, like the value at risk model, and then they're very, very wrong.
It's a brilliant question, but I would say, Surya, algorithm is more discrete. And that's what robo-investing wants to do. It's not rules-based. It's more mathematical-based.
Yeah, the problem with our algorithm, as we found out in 1998 with hedge fund failures and supposedly risk-free investments, and we found that again in 2008, Brendan, when we had the financial crisis, and the target date funds, which were supposed to work well, they simply didn't work. So the so-called tail events and once in a century, once in a millennium events seem to be happening every 10 years. And that's the problem for algorithms.
And very quickly here, this debate comes up when the market doesn't correct and doesn't go down. Nobody's talking about robo-investing when you're down 18%.
Of course. And what you missed on television is Sri-Kumar's smile when the subject came up saying, "I'm better than a robot." There it is. That's the smile. That's the one.